Did you know there's a Fed meeting next week that could change the direction of the entire market? Some investors are saying rate cuts are coming. Others are saying we might actually see hikes. Today, let's break down what's really going on in simple terms. The Federal Reserve has held its benchmark interest rate at 3.5% to 3.75% since June. The next meeting is scheduled for July 28th and 29th. This is the first meeting under new Fed Chairman Kevin Warsh. So markets are a bit on edge, since nobody is quite sure which direction he'll steer policy. Here's where things get interesting. A few months ago, everyone expected rate cuts. Fed Governor Christopher Waller has said the inflation risk has completely flipped. That means the Fed's focus has moved away from the job market and back toward controlling inflation. Two major banks, Bank of America and Deutsche Bank, are watching this shift closely. They've gone as far as saying we could see 2 to 3 rate hikes by the end of the year. On the other hand, New York Fed President John Williams recently said inflation has already peaked. So you've got real disagreement within the same committee. And that disagreement is itself a big story. Why is this happening? The Fed raised its 2026 inflation projection to 3.6%. And when the Fed released its last dot plot, the split was clear. Three members dissented. One wanted a bigger cut, two wanted no cut at all. In other words, the Fed itself is struggling to balance inflation control against economic growth. Why does this matter to you? If rates stay higher for longer, it directly hits growth stocks, like tech companies. Real estate also comes under pressure when borrowing stays expensive. So do utilities, since they rely heavily on borrowed money too. But the financial sector, banks like Morgan Stanley, actually benefits from this environment. That's because their net interest margins improve when rates stay elevated. That's part of why Morgan Stanley just reported record profit, with equities trading up 69%. So here's the takeaway. The Fed's decision on July 28th and 29th isn't just a number. It will set the tone for the year ahead, so make sure your portfolio is prepared for either scenario. If you enjoyed this video, don't forget to like and subscribe, and hit the bell icon so you don't miss the next Fed update. Thanks for watching.